What is up, guys? This is Alex coming at you live from Winning Trades for You representative. Today I'm going to go over a pretty important and crucial subject to your profit gain in trading stocks, whether it's penny stocks, forex, anything that has a ticker. It's a good tutorial and insight presentation for you to understand how to trade breakouts, whether it's gap trading, reversals, momentum trading, support, resistance, which is obviously what I'm going over, average volume, late day breakouts, and high volume liquidity. We'll go over what all that stuff means. I don't want you to get confused too early, but just stay tuned, grab a pen and pencil, whatever you guys have, and a piece of paper, because we are about to embark in the world of breakouts. Breakouts, what are they? The clear-cut definition for breakouts are a price movement through an identified level of support or resistance, which is usually followed by heavy volume and increased volatility. Traders will buy the underlying asset when the price breaks above the level of resistance, and they'll sell when it breaks below support. Why is that important, and why do I have this ticker graph up? Well, let's check it out. Got this little pen device I have for you. What we see here is how this, I don't know what ticker this is or what the price is, so let's set this at like 80 cents. You know, it could be a lot more, it could be a lot less. 80 is a good number. But you know what? Let's set it at 23 for my favorite basketball player, LeBron James. We'll set it at 23. We'll have this first resistance marker, so it's pretty much a setup. And this could be any time frame. This let's pretend this is just a single day. So this is the open, and at the open it cracks down, and then it has momentum up to the upside and sets resistance. So this is resistance marker 1. Then it consolidates, hits support levels, which this is a setup for support, which you'll see continuous times through the graph, and it's holding support. Okay, so it's a hold. What happens here? You always hear, whether you're on StockTwits, trading in anywhere, it's a crack. It's a crack of support levels. And what's the reciprocal of that? It breaks. It's a breakout above the resistance towards the upside. So what happens in this graph timeline? It hits, sets the resistance, consolidates, cracks, but then it consolidates back up to the upside, holds support, holds support, holds support, reaches resistance, and tests it for a second time. So we'll go over what that means here in a second, but that's a double top. Double top. Let's get this pen going, make it double top easier. And then it consolidates back and holds support. A very bullish indication. Holds it. Momentous little updrive once more. Doesn't really reach the resistance. Then it consolidates back down and holds support. Hey, if you have 1, 2, 3, 4, 5, 6, 7. If you have 8 support levels held, and then you have a resistance test once more, which would be the third resistance test successfully broken through to the upside, that is a breakout. Okay, so that just sets the whole underlying subject matter of this presentation. Breaking down the breakout. What I've done through YouTube, if it's not there, it will be in a second. I go over each of these ticker breakouts. This one, what the heck? There, this one, HMNY, which is Helios in Matheson. It went from $1 to a nice $10, 100% or 1,000% upside on June 6th, 2016. Was able to be profitable and able to have a bunch of profitable traders in our Winning Trades for You platform. I'll go over, if you're not already a member, go over how to get a nice free trial for you going as we look to release a platform to come. But example 2, I go over my executions personally, the upside potential, and then the price movement in live time of each of these tickers. So this is more of an abnormal. You're not going to find this type of breakout usually. You're not going to. But when you do, when you're able to successfully execute something like that, you're going to be a very happy person that day. And EXAS, it was actually today. I was on a plane flying back from Colorado, and I was in the airport. I was able to execute this. This was more of a normal breakout, But just click above each one if you want to check out what my process and planning goes into each trade that I make and what I look for. It's a lengthy analysis video, but each one is great. Resistance and support levels. Again, it's going to be kind of simplistic to many of you advanced traders, but stay tuned. Resistance, resistance, double top, and then a nice breakout once more. Support held, support mostly held, support held. Okay, so this is just a more visual type to see that you have a horizontal line on each price point. We got a four time support held and then 2-time double top for the resistance test. I don't know what goes on past this point, but this is where you just need to really look, because you could have the same price action occur into the future of that chart. Common indications of when you're going to have a breakout possibility. First, we're going to look at my favorite. It's Finviz. You can put in your portfolio and your specific tickers. It gives you the most, I would say, most accurate and most the fastest news possible. So if you're in there at like 3 a.m. your local time, it's a great thing to have your portfolio in there, as well as just see what's going on in the market. Yahoo Finance, Google Finance, Market Watch. Those 4 are my favorite, and the fastest news do get pushed through the system, I have found. Bloomberg and Reuters. I'll have all these URLs in the description of this video, but check them out. You know, check around. Just have a nice bookmark file in your URL, you know, Chrome, whatever you use, and just have these to your workmanship. So when you're looking at news and hype, completely, I would say different things. But when you have a hype up to news, that's going to be a nice breakout possibility in momentum ride for profit. Now news, if it's large enough, if it's great enough news, your average volume, which you can find on any descriptive summary of tickers, so average volume, it's going to be less than the day's volume. And why is that important? Because it's going to push the liquidity up and push the chart up, especially if it's a low float. What do I mean by What do I mean by low float and high volume? Well, we're going to look into that here. Here's something I suggest you write down if you don't know already. Liquidity. As you can tell, it's my first time using this pen. I'm sorry about that. Liquidity is the availability of liquid assets to a company. So the availability of potential volume and indices of that company, which liquidity, if I can get this, pen marker different here. Perfect. Blue. I like blue, but I don't like that. Look at that. Liquidity. What the heck is liquidity? Liquidity, so the greater the liquidity equals the greater volume input. So especially if it's a small cap, low float, and why do I say float as so intense? Because when it's a low float, which is less than 10 million, and that's just the regular shares that a company has issued to a public that are available for investors to trade. When it's high liquidity, high volume, which pushes the volume up, it is a low float stock. It is going to be volatile and potential breakout possibilities. Why is it so important? Because when you have volatility and when you have a low cap, low float stock, especially if it's a penny stock, you're going to look at some crazy price action. So, you know, you could have a nice, especially with a video I'll come up with explaining in a little bit, like HMNY and all those small MGT this year. low float stocks with crazy liquidity and volume upon news release and press release that were able to incredibly break these out into immense highs. We'll go over those in a second. If you haven't watched my video already. Sorry, I'm skipping around this PowerPoint like a hopscotch. My bad. Why the heck is there a brain here, and what's it have to do with price action? Look at this chart, guys. You have a support level set here. So you have about 550 as its low. You have somewhere around there to have the nice support for this certain graph. Breaks out. How was it confirmed? With the resistance breakout up to 38.25. This is where psychology and crazy PowerPoints come into play. You know what? Fine. It's cleared for you guys, but if you can go back to see. Psychology, mentality, those are key in profit gain. Okay? 95% of traders lose money. Why? Because they'll see this breakout and they'll probably, most traders don't even know it's breaking out until like here, because this happens in ignore the time. This could be a day. This could be a day, and this could be any price. I just found this to show you how crazy these stocks can move with volatility. And they go, oh crap, it's breaking down. It's going to break down to where it first started here. But you also have the short seller, the shorts, the bears of the market wanting to short to back to up to past resistance, new support levels, and it starts to break down as such, but then it consolidates and reverses up to the upside once more, actually breaks the first resistance marker to 41.50, and then consolidates back down to a downside. So even if you bought here, let's say you got into the trade late, you bought here thinking it was going to rise a lot more, and then you take a loss here thinking, oh crap, I'm in the negatives now, and then it was able to reach 41.50, you're not making any money. You're not doing anything but losing, and you just lost, $10 a share on this certain stock. What the heck is the advantage in that? Then it breaks down, and it continues to break down to the support trend that was previously written, but PowerPoint wanted to give me some trouble. Hits that support, and then what happens here? So let's say this is a day's worth, and this is the end of day trading, which is my favorite part of the day. It then breaks all these resistance markers that were, past support, and hits up to 47.19. It's just all about your psychology and mentality. You need to think of this whole stock market game as a technician. Okay, so like a technician, you need to pull apart the indications of what's going on. So what do I mean by that? Technical analysis. You need to connect 2 and 2 together, and put the lower or the lows together and put the higher highs. You need to understand what we'll go over next, and how is this so important. And it might seem so confusing to you right now. It was extremely confusing to me too, until I was able to break it down to its most simplistic form. Common indications, technical analysis. This is an incredibly insightful and important part of this whole presentation in your understanding of breakouts, tops and bottoms, reversals, head and shoulders, triangles, flags, wedges, gaps. Easier than you think. You hear these all the time, whether you're on StockTwits, anywhere you go, and people go, oh, inverse head and shoulders, inverse reversal. What else you got there? You got a island reversal, saucer reversal. I'll go over every single one to come. Just stay tuned and bear with me, and don't be a bear through it. Cheesy but hilarious. Okay, are you ready for this? Just get the pen and pencil down and take notes. I promise it will help. Double top pattern. As we went over it before, you got the top number 1, top number 2, and then it was able to crack support, and it was a bear. You never know. You need to watch what happens after the top 2 failure to break resistance. Double bottom pattern. same thing, just the inverse. Double bottom, single bottom, double bottom, and then was able to break the resistance. Again, this could be 10 bottom holds and still break the resistance. But it is a bullish indication that it has potential if it holds that support time and time again. Again, this is a triple top 1, top 2, top 3, and at almost 90% of the time, if you have a triple top failure, you're going to have that completely break down, crack the support, and then break down to its lower support level. But you just need to watch it once again, because you can have a reversal bull that can break down, hit that support, and then once again test and successfully test to a breakout. Some more reversals. Completely different thing. Actually, not completely. It has to do with tops. 1, 2, 3, just like we went over. Triple top hits the resistance, support, and then after that third time, just like I talked about, it cracks through the support lines, and it's a bear. It's a good short for shorts. It's good, but to long this trade, especially like once you start seeing it right about here, it's deadly. It's fatal to your portfolio. Triple bottom reversal, support, 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 hold. Okay, so and that's the same thing. It's a triple. That's actually a quadruple top, and then tries to or break through that resistance to break out, and it did. So it's all about what these trend markers are doing, and to successfully analyze technical analysis, you're gonna have a ton of volume. So also, as you should know, it's a ton of liquidity. But also, to have these patterns, float is important, because with a low float, just to reiterate, low float, you're going to have crazy volatility. All three of those are a perfect paradigm to what you can profit from in the breakout. Reversals continued. These are just more advanced reversals that you should keep in mind. Island bottom, it's more like a V, where it's a pattern used for traders to predict the reversals of a downtrend. The rightmost gap confirms that the demand for the asset is greater than the supply, that the downtrend is reversed. So these gaps, they aren't just like no one's traded. They are like extended hours. So let's say this is pre-market, and this is after hours, right? After hours. So both of those denote extended hours of trading, and we'll go over the indications of those here in a second, but let's just move on. We have a rounding bottom saucer bottom reversal, which is more of a U. I don't even use island and saucer, but I use V and U. This is just a prolonged downtrend that can be used to suggest the trend is reversing. So it's like a nice support, it cracks that support, but it still holds, and then moves with momentum to the upside, holds support, and then is a nice momentous breakout from there. So even if you bought down here, you're looking at a nice, and this is incentive, this is extra money for you. But if you want to test that, if you buy in to test that resistance, that's a great double plan to have, because you're profiting from this, and then you profit from this as well. So you could either sell or you could hold here if it was able to break down. Nice strategy to have. Head and shoulders, you hear this a lot, but you probably disregarded it. But why is it so important? This is a bearish head and shoulders right here with the downtrend, and this is a bullish inverse. You got the head or the shoulder, head, shoulder. I just think of it as a person with its arms up. That's me trading. Like, what the heck's going on? The head and then the shoulders, just like we denoted. And think of the arm as terrible drawing, as down here. So it cracks support. And that's a bearish signal if it is in that form. Now the inverse head and shoulders pattern, it's just a reciprocal. It's on the other side of the trend marker, and you got the two shoulders and a head. The neckline, I don't know why they refer these two as body parts, but so be it. And then it's able to be an inverse and break that resistance and successfully break out. So you need to keep these. I'm not a huge technical analysis guy, I will be honest with you, but it is one of my 7 steps in my watch list creation. I confirm possible breakouts, I put them through a line of tests, and then I implicate technical analysis to see what I can see in the graphing, in the trend graphs themselves. So you need to understand that it's not always just simplistic fundamental analysis. Triangles, I swear this is important. Don't doze off. It will become in handy to your money, to your profit. It's great to have. And why is this symmetrical triangle, ascending triangle, descending triangle? And these are just denoting, I don't want you to get confused, just kind of more in-depth for each one. So you need to look at these linear trend lines, and you can do this on your own platform brokerage account, and connect the highs and the lows of each trend mark. So you see how these ascending and descending, how the horizontal trend line is linear and horizontal to the resistance, and then there's higher lows. This is what a higher low would denote, and it's an ascending triangle, so it's a bullish indication, and this is a bear. This is a reciprocal of this, but it's lower highs and a support that is held but then broken with this descending trend line. So understand that and keep that to your knowledge when you're even looking at midday breakout possibilities. So we're looking here at the ascending triangle. Again, you have that resistance held firm, but you have higher lows and a nice ascending triangle formed with a breakout past that resistance. And this is a nice profit strategy to have. So you connect the high resistance and take that price marker, so take that difference between the two and use that for your profit target. And that's what I do as well. I set my limit, my sell limit, to that denotation, and then use it to indicate what I'm looking for when there's no highs to be seen. Okay, and then you have the symmetrical triangle, which is just a squeeze into that triangle mark, and it's higher lows and lower highs. And then once that mark almost converges, you're looking at a breakout possibility with a long entry triggered. And this is where I set my triggers to a ride out and profit from that breakout. And sometimes these could be immense breakouts at this point, but you can also have the reverse, and if it's able to crack that support, it's a short entry to ride the descending graph down. Continued. Oh my gosh, these are just more clear pictures of what I just explained. So if you want to take an in-depth look, pause the video and use them to your benefit. Again, this is all for you guys to understand how to read charts beyond looking at stock twits at what people are saying. Don't believe them. Most of them are protecting their positions, and a lot of them know this stuff but want to get these trends differentiated to protect their positions. So if you know this, you're going to be a smarter trader and more profitable trader. Wedges, I'll get over this soon. I promise. Technical analysis, it can be boring, but stick with me. We'll if you have any questions, just comment in the YouTube question area, and I'll do my best to answer them. Falling wedge pattern. This is more of a descending highs and then descending lows to indicate possible breakout to the upside, or if it's going to keep going lower, you can short that and implicate it through technical analysis to pick your shorting target cover. This is a rising wedge pattern. It's a more bearish. It's bear. Yeah, it's higher highs, but it's also higher lows. But if it breaks outside of that wedge, it's going to be a implication that it's going to be a breakdown. I'd probably pick one of these support markers to pick my cover, but I would have to have confidence that it's able to break down past this first support to be able to cover at that point. Gaps. Gaps. What are gaps? And what's the difference? Breakaway gaps, exhaustive gap, runaway gap. When does a gap occur? Extended hours. So you see if you pull up a nice chart, especially if it's like a monthly chart or a weekly chart, you're going to see these gaps in trading. So that's more of a breakaway gap. It's a bullish. This is bull. This is an exhaustive gap. It's an exhaustive gap is found at the end of a prolonged uptrend and is used to suggest that the momentum is slowing down or that a reversal may occur. So yeah, it does, have that implication of a breakaway gap here, but then it starts to break and it even breaks the open. So once you see a nice prolonged chart like this, because it's never done that in its past history up to this point, it breaks that open mark price set and then just starts to descend from there. Runaway or measuring gap, yeah, it has the same pretty much breakaway gap tendencies, but a runaway gap occurs near the middle of an identified trend and is used to signal an increase in the trend's intensity. So it's going to become more intense from that runaway gap. So it's not as intense, not as large of a upside to this point, and then boom, it has that momentum to be more potential breakout from there. Flags and pennants. The flag pattern, you hear a lot of traders talk about flags and pennants, not as much pennants, but flags. Notice how the price continues in one direction, continues its trend once the price breaks out of the flag. So when people go, oh, it broke out of its 7-day flag, it's them setting the linear lines from the highs and the lows and correlating them in a pattern type way, and setting them to see when the price movement is able to break out of that graph line. So that's a bullish indication, and you could take a long position at that point. But just beware, because it could have a reversal once it hits resistance. This would be a nice place to implicate a position, especially if you're a day trader. But you need to watch it. It's specific for each ticker, but you now have the knowledge to be able to do so. The pennant, it's again connecting the highs and connecting the lows from that upside, and it's wedging them together to see it break out of the pennant and have momentum breakout possibilities from there. Again, don't even look at this side ticker marker, but just look at these trend lines correlating, and then the trend breakout and abnormality in the trend graph to have that type of indication of a bullish graph. That's it for technical analysis. I was even getting exhausted myself, but now you know. If you need to go back, go for it. Any questions, kubicwealthmanagement@gmail.com. I'll be able to answer whatever you got. This is my own personalized strategy in trading. It's able to work for me. I've been very successful in doing so, and it's something to even look at. Have it in your trading mentality. The CEO trading method, personalized by Alexander Kubik. C's for confirm, E's for execute, O's for orienting. Confirm the breakout, execute the trade, and orienting a protection plan. Confirm the 5-minute 1-day candle test. So when you're seeing a trend and you think it's going to be a bull trend, get those 5-minute 1-day candles going. And if you have two, even 1.5 collinear 5-minute trend candles, I would look into that, especially if it let's say this is resistance. It breaks that resistance, and then you use that confirmation to ride the upside. Execute the trade. The importance of trading with limit orders. Market orders are terrible. Trading should very rarely do I trade with market orders. I trade with limit orders because you can set the price, especially if it's over. Let's say its resistance is here, and you're looking at all these other tickers over in your portfolio, and you want to set your market limit order 2 cents over the resistance if it's a great resistance, and then it triggers, you get that order fill. But if you order this trade and you do the same trade limit at market, you're going to get a most likely terrible fill just because the spread. You don't reassure your position, you fill it at whatever the ask is, and you get, most of the time it could fill down here, you aren't even benefiting, and then you sell off at resistance, you set your stop loss order at resistance to protect your position, and you end up losing. So orienting a protection plan, creating a stop loss order. So once you're here, once you're over the resistance, and you set the limit order to trigger your position, and then you want to look at transferring your focus upon creating a stop loss order. So it's loss protection, profit maximization, and trade duration. Trade duration, how long do you want to hold that position? How long do you want to have that position open? So after hours, extended hours, over the weekend, through news, through public release of information. That's all things you need to take into account. Now, just going back to stop loss orders. Stop loss orders, when you have resistance and it was able to break out past that resistance, I usually set my stop loss orders somewhere around the like 2.5 cents. Now that's different from an alert I set on my Thinkorswim platform. I set my alert about 1 cent over the resistance point to be able to actively watch that position and trend to have that support turn into, or have that resistance turn into support, and see if it holds it, and then ride it from the upside. But you never want to just set your stop loss order at the past resistance, now support level. You could totally fail out of the profit that is to come. But that is your own that's your own opinionated trade there. Correctly executing breakouts, maximizing your profit potentials, level 2 quote analysis, and devising a get out strategy. Level 2. This looks probably crazy to some of you, but it's not. It's something to look into. You have on the left hand side there are a lot of level 2 quote websites that offer this for free, and usually you have another column here, and these are the brokerages that are the indices that are pumping out these orders. So you have the price, size, and time, and you need to always understand with the size, they leave out the last 2 zeros in the trade, and they round up. So this 700 would be 70,000 shares in. So this is the bid, this is the ask. As you all know, when there's more bidding going on, the upside potential is growing, and then the ask, it's the ask price. So when you have a larger bid action going on here, you have a bullish sentiment. So this is the bid, it's the ask, and when you have this side going crazy, when you have a bunch of orders coming in for whatever company this is implicating, you're going to have a rise in the price. Okay, so bid, ask, and the same thing goes for this side. If you have this side going, hey, AWOL, and you have a ton of ask orders coming in, and this is going to be a bearish sentiment. Okay, so this is something to have up on your screen when you're looking at a breakout, because these are very, very indicative with a breakout's potential. If you have huge order limits coming in for a bid for size positions and small asks, you're going to have a nice upside potential in this. So this is something to look into. I love level 2 quoting. Risk management, establishing a plan. Reduction, accept, transfer, and avoid the risk. Profit protection tactics. So as I explained earlier, setting stop losses and limit orders. Reduction in position size. How confident are you in that or how confident are you around that resistance point, support trend line, to keep your entire position open. So it's the same thing with reduction in buy-in percentage. How confident are you in the trade? Are you going to put your whole portfolio assets and capital into that single trade? And why are you doing that? You need to ask yourself instead of setting the trigger, because this is how traders lose. They just get too over impatient. They get too crazy about their buy-in percentage, and they can wreck a whole portfolio on one simple trade. Keep that in mind. Risk versus reward. If you're actually very confident and you have so many things backing up your insight on why you're taking that position, increase that percentage. Just keep that in mind. It's all up to you. Again, I trade as is, and I get too confident in trades sometimes. A lot of times they tend to pay off, but sometimes I wish I never made them. So you need to accept small gains. Accept small gains. If you're over resistance point, the breakout is not looking as momentous as you thought it would be, sell out, and you can always return to a trade. Never think you can't unless you're in pattern day trading, which my past videos explain how to get out of that ruling. But it's something that if you're gaining profit from that position, don't get greedy. Accept losses and move on. Avoid greediness. Greediness is a pathway to failure in the market. Transfer your attention upon various sectors, overall market, various potential breakouts. Don't just focus on one stock and you think you're going to spend your whole day looking at this single position and you're going to wait for it. There's so many other potentials out there that you can either short sell or go long on that you have no idea, because you're looking at a single trade all day, wishing for it to do something that's not happening, and you miss out on all these other trades. Avoid chasing, avoid holding and hoping. That's fatal to a portfolio. Avoid emotions, avoid others' opinions. Look into every trade yourself. Don't follow. I give out alerts on my trading platform as well as my other administrators, and we give those out for you to insightfully look for yourself. But we do like to give alerts out because it's what we insightfully see for profit gain in our portfolio. Again, I don't want anyone looking to others for opinions on trades, because especially on stock tweets, you're going to have so many people trying to pump their positions and try to either recover losses or build onto their position, that you're not going to come out a happy person at all. Avoid trading without a strategy. You need a strategy. It's like a game plan. It's like how the Cavs are going to take out the Warriors this year. Sorry to the Warriors fans, but you need a game plan on how you're going to implement these trades. Avoid nervousness. Nervousness in trading, especially going back to the other past slide. Mentality, psychology. Most important parts of trading. You need to cool yourself, be calm, cool, and collective. It's a very special thing to have when you're a trader. Listen to some music, turn on, I don't know what type of music you like, but a lot of smooth jazz I listen to. Just calm yourself when you're trading. An overly nervous trader is a failing trader in itself. Breakouts versus fakeouts. You got to understand, when a breakout like this, when it actually hits that resistance, breaks out, and you see right about here, it's a little nice consolidation. But then you keep your belief in that trade, and you ride that consolidation down. Maybe sell out 1/4 if you're actually nervous, you don't know what's going on, and you sell it like 1/4, but then you keep the 3/4 to ride up to more profitable gains. And then once you see it down ticking as much, you probably might not get the whole meat of the move, but you're going to be able to get all this upside. That's something to look at. Fakeouts, it's a big thing in the market, especially in the common day market. You're going to have a single top, double top, support held, but it breaks past this first level of resistance, this set point that we talked about. It breaks past it, but you think it's going to break out to greater highs, and you have these fakeouts. You have fakeouts here and here. You have a first collinear fakeout here, and then you think it's going to ride up, do the same thing that it has, and then it downtrends. And this is where a lot of sellers move on. They sell under this past support, and then the ones who stick around or even buy in here think it's going to move all the way back up to the upside, break out, and have the momentum that it should. It doesn't. A trader who anticipated a MACD cross above the single line would have been faked out and probably would have made a losing trade. So you need to keep it's all mentality, stop losses, limit orders, and how you trade. You need to practice your tactics. Practice your tactics. I like that. And, you know, it's all about profit, gain, and loss protection. You're going to have losing trades, guys. You're going to have losing trades. You're going to have failing times in the market. It's just how you recover and how you learn from those. With every losing trade comes a learning lesson. That's pretty much it for the winning trades tutorial video that over breakouts. It's pretty indicative with the trading platform that we have going right now. For all those that aren't in or not even aware of the trading platform, we have a great trading platform releasing winningtradesforyou.com early July, early to mid-July. But for right now, you get a free 1 month free trial going into this month with a donation to either of PayPal, Google Wallet, or Venmo. And I prefer PayPal. It's easier for me to get that indication that you made a donation and be accepted the same day. And then Venmo, it's Winning Trades for You, Kubik Wealth Management, Gmail for Google Wallet, and then PayPal, Winning Trades for You. This is lifetime, guys. This is discount tier, and one donation amount can save you thousands of dollars if you're a member for a good amount of time. Even if you're not, $50 or more, you get $50 will get you 20% discount, 28% discount, 25% discount with a substantial donation amount. But guys, I'm creating a platform from the startup. I'm creating with he's a genius developer. He's creating this whole trading platform for collaboration, alerts, insight, and around-the-clock ticker talk that we have. Just it's been incredibly helpful. There have been people in our platform already have profited $20,000 in single trades. Trades are alerted through MMS, SMS, and email, whatever you prefer, instantly in under a second of what I personally trade, as well as the other trading admins that have a lot of great backing to their trades. Now, if you have any questions, email me, kubikwealthmanagement@gmail.com. I hope this entire insight and presentation was able to help you understand what's going on with breakouts. If you have any questions, comment, and I look forward to future videos for you guys.